Hi, everyone. Thank you for joining today. Welcome to Improving Accuracy, Accountability, and Access with Workday and Adaptive Planning. Today, we're going to be covering how organizations can connect operational drivers to financial outcomes using Workday Adaptive Planning, and then close the loop by publishing that data back into Workday for enterprise reporting. Starting with a few introductions, my name is Courtney Machoon, and I'm a partner at Ascend Planning Solutions, a boutique consulting firm focused on Workday Adaptive Planning.
And I'm Amy Starnes, Principal Functional Consultant from Syssero, a full-service Workday consulting and managing service partner.
And together, our teams partnered to deliver a connected planning and reporting experience, resulting in cohesive solutions that support both in-depth financial modeling and enterprise-level reporting and governance. On our agenda today, we will cover three core components. First, a KPI forecast model where we load statistical volumes by cost center and line of business and apply forecast growth assumptions. Second, we will review a revenue model where we translate those KPI volumes into dollars using price times volume logic, with the ability to adjust rates up or down. Third, we'll show how the forecast can be published back to Workday, enabling enterprise reporting and broader stakeholder access, even for users who do not have access to Adaptive. We'll walk through the full loop from operational inputs to enterprise reporting. Let's transition now to an overview of today's demo. We've set up the fictional organization, Northern Illinois Medical Group, as the setting for our revenue and KPI models. NIMG is split into two companies, Northern Illinois Medical Centers, which focuses on patient care and surgical visits, and Northern Illinois Integrated Diagnostic Services, which handles imaging and diagnostic testing. At the core of this model is a straightforward dimensional structure, which echoes the common dimensions we see many of our clients using today. Everything is modeled at the intersection of company, cost center, line of business, and GL or statistical account. This gives us enough granularity to support multi-service locations, diagnostic carve-outs, and detailed GL reporting while still keeping the model manageable. The important part here is that the operational and financial data share the same dimensional logic. We will show how we take the key statistical data for this business, such as patient visits, inpatient stays, and diagnostic imaging volume, and generate a full forecast for KPIs and revenue, which we can quickly distribute to all of our business partners. This KPI cube is the driver layer of the model. We've loaded historical actuals for statistical data such as patient visits, CT scans, surgical procedures, and inpatient stays. Those are loaded by cost center and line of business. To forecast the next year, we apply growth or decline percentages to those historical volumes. The output is a full KPI forecast at the same level of detail as the actuals. Note that today, we're applying a straightforward growth percentage to forecast KPI volume. In more advanced models, this layer can incorporate additional drivers such as provider capacity, utilization, occupancy rates, or seasonality curves. The framework we're showing is intentionally straightforward for clarity, but it's designed to support those more operationally sophisticated inputs. Our forecasted KPI volumes flow directly into the revenue model. We take the operational targets and turn them into financial outcomes. We're deriving revenue as a straightforward KPI volume times rate, with an optional percentage adjustment to the pricing. This gives us two independent levels, volume growth and rate changes. We're forecasting at the intersection of cost center, line of business, GL account, and month. Now, by putting this all together, instead of saying revenue is up 5%, we can say visits are up 3%, rates are up 2%, and here's the combined impact. To make this work, each KPI maps clearly to revenue accounts. For example, patient visits drive ambulatory care revenue, while CT and PET scans drive imaging revenue. That mapping is explicit in the model, which means if we change a driver assumption, we immediately see the downstream impact in revenue.
Workday becomes the enterprise system of record for reporting and distribution, which allows role-based access and distribution to stakeholders who may not have adaptive access. We're able to send out detailed snapshots of the business, such as this budget versus actuals report, to anyone who needs that detail. Next up, we'll transition to our live demo in Adaptive and Workday.
I've opened up the KPI and Revenue Plan dashboard for Northern Illinois Medical Group, starting from the Instructions tab. I've selected our 2026 working budget, where we'll be doing our planning today. Across the top of my screen, I have time, level, and line of business as our dimensions and filters for the tool. You can see in our level structure, the hierarchy reflects our two companies, medical centers and integrated diagnostics. As I expand each one, you can see the different locations which roll up to the parent, represented as cost centers. Our Instructions tab, I'm able to review the instructions the FP&A team has laid out for me, and there are links to documentation, recordings, and support tickets if I need additional guidance. When I'm ready to start planning, I can open up my KPI breakout tab and take a look at the instructions and planning elements laid out for me. We have placed a cube sheet directly on this dashboard so that users can make their changes and see the impact all in one place. We default to the patient visits KPI, but I can expand the cube sheet and use the filter to flip to one of the other KPIs. Adjusting the filter to surgical procedures narrows down our view to just the cost centers, which this KPI applies to, such as Downers Grove Surgical Center. Thanks to our integration with Workday, we have loaded historical actuals for this intersection, and I can use them as a guide for this year's forecast. After a discussion with the Downers Grove team, we realize our current forecast is coming in too low, and we actually expect slight increases in February, March, and May of this year. I'm able to quickly adjust those numbers in the cube and then save my changes. Once I'm done making adjustments, I can close out of this view and jump over to the Revenue Breakout tab of our dashboard. On our Revenue tab, we have our Revenue by Line of Business sheet available to enter our adjustments. We also have at the top a reference report which shows the KPI accounts broken out by the line of business, which we can use to inform our planning. If I need additional detail to support my revenue plan, I can click into the report and drill into a level to show a full breakout of any one of those line items. Revenue on this cube is calculated as KPI volume times price, and we can adjust the price using the percent input. On the previous tab, we adjusted the surgical procedure volume for Downers Grove Surgical Centers, which falls under our surgical line of business. I'll use the line of business filter to jump to our surgical centers. We can see that our report also shows the surgical procedure volume following that change. To see the Downers Grove breakout on the report, I can either use the level filter or the drill down functionality. Now we see the surgical procedures we've updated previously. On our cube sheet, we can see that we have a flat 4% pricing increase planned for Downers Grove this year. However, we've also determined after reviewing increasing costs specific to that location, we will need to raise our pricing. I'll key in that adjustment and carry it forward to the end of the year. After I save the change, we can see the immediate impact to our revenue. And I'm going to filter this back to our line of business as a whole. Now that we've finished our initial adjustments, I can click over to our Summary tab and review the whole picture. On our Summary page, we've broken out our data into several different key elements. Across the top, we have the revenue from our medical centers and our diagnostic classifications alongside net income for the business. We also have our revenue broken out by type and charted against patient visits. Highlighting the strong correlation between the two. When we scroll down, alongside our revenue breakout by line of business, we have a summary report that shows our budget versus prior year actuals. We can see that our revenue forecast is an increase from prior year across the board, but net income is actually showing a slight decrease year over year. At a glance, we can see this is due to the significant jump in operating expenses without an offsetting revenue increase. What's great about these active dashboards is that these elements are dynamic. We can select any of them, such as this net income number, and drill down by elements like time period or level to get to a more detailed breakout. The data we see here is also dynamic to the filters on our dashboard. The data we see here is also dynamic in the filters on our dashboard. If we filter down to the Downers Grove Surgical Center once more, we can see all the elements on our dashboard update accordingly. We also have the option to add comments to these elements and notify our colleagues of changes or other items that need to be reviewed. Active dashboards are a great tool to consolidate planning into a streamlined process. For NIMG, once we've finished our revenue updates, we will use the Publish Plan feature to quickly send our data back to Workday for use in additional reporting there. From here, we'll transition over to Amy, who will be taking us through some reporting and governance items in Workday.
To begin, we'll review the revenue by line of business report. We can see that it includes the same dimensionality of company, cost center, line of business, GL, and statistical account as we saw on the adaptive side. Now, as we look at the actual versus budget P&L by company, you have a side-by-side comparison with analytic indicators. Each statement line expands to the account numbers included in the line. You are also able to drill into the totals to see more granular details and even pivot the data by additional dimensions. So now we're able to see those details by cost center and fiscal period. In Workday, access is granted by adding a worker to a specific security group. In this case, a worker is assigned the cost center manager role on each cost center. This allows reports to be written to ensure that only the person in that role or that specific cost center has visibility. I am assigned as the cost center manager of all cost centers at the top of the hierarchy. This gives me access to see all data for all cost centers. So as you can see as I scroll, I am able to see every cost center's data. Oscar Brown is assigned as cost center manager to only 2 specific cost centers. When I go into Workday as Oscar Brown, only 2 cost centers he is manager of will be visible to him. As you can see, he only has access to the 2 call centers he manages. And he also has the same drilling capabilities as I had for all call centers. Workday also has dashboard functionality. Dashboards provide a snapshot of data in tables and/or charts. There's also opportunity for a user to view the presented data differently. For example, on the budget breakout chart, a user is able to use the gear, edit settings, and select the ledger account summary revenue to only see revenue data instead of the entire P&L. The user is also able to change the chart format right on the dashboard. For example, if the Configure Chart Data symbol is selected, the user can choose any of the available chart types. Now I'm going to transition back to Courtney.
What we've walked through today really comes down to alignment. When revenue planning is multidimensional, you gain precision at the granular level while still maintaining a clear, consolidated view of the entire organization. That means site leaders can understand what's happening in their specific area while executives see the full financial picture across the enterprise. By incorporating key statistical drivers, we're grounding financial forecast in operational reality. We're able to forecast activity and translate it into dollars. Managers can see how their operational assumptions directly impact financial results. Finance gains transparency into what's driving change, and leadership benefits from a forecast that's both defensible and actionable. When we're able to combine the best of Workday and Workday Adaptive Planning, we're able to generate a more accurate forecast and better decisions across the organization. That brings us to the end of our demo. Thank you everyone for joining. We hope this was a useful demo of how connected planning can really enhance your organization's planning process. We would love to discuss this further with you. You can connect with our teams at the email addresses on the screen. Thank you again, and looking forward to speaking with you.